Welcome back. You're watching Stock Watch with me, Zinati Guma, and join me to unpack your stock-related questions this afternoon is Wayne McCurrie from FNB Wealth Investments. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, Wayne. Wayne, a question actually that was addressed to you, I think last week. I did ask some of the analysts that I had on the show last week, but I do want to ask you on your opinion. So it's about sentiment and, what influences the JSE. The question goes, the Dow, S&P and NASDAQ have been flying. If, as Wayne says, the big SA companies have such high concentration of business outside of SA, why do their share prices not respond to foreign sentiment rather than to SA's depressed outlook? Or is it that they do not have much in the way of trading in the US rather than Europe?
No, that's actually incorrect. So there's, broadly speaking, two groupings of shares that are listed on our JSE but have global exposure. The one's the mining shares, and the others is basically Naspers and Prosus.
Yeah.
Now I know there's Bitcorp. I know lots of companies have got overseas, interests, but broadly speaking, it's mining shares and Naspers and Prosus. And mining shares are driven by the commodity cycle, which has been in a down cycle for 2 years. So of course those shares aren't going to perform. And then Naspers and Prosus, even though they have come off the very, very weak levels we saw 2 years ago, that's tied to China. And we know China has been cracking down on the tech companies. The Chinese economy is not doing well, and the Chinese stock market is nothing like the NASDAQ or the S&P 500. In fact, it's done extremely poorly. So although broadly speaking, the question that the viewer asked is, so many of our companies are global, why don't we participate in the global bull market?
Yes.
Is it's very, very specific, those two groupings for our stock markets. In other words, we do well when interest rates fall and there's an economic recovery worldwide, which hopefully that's going to happen over the next 2 to 3 years. That's when our mining shares do well. That's when our rand does well. So whenever you do investments, overseas, local, tech, whatever decisions you make, rand, dollar, understand where you are in the cycle before you make those decisions, because where mistakes are made, as what happened at the end of the 90s, as what happened in 2015, and as what's happening during COVID, and as what's happening now, people just look back for the last few years and say, it's all NASDAQ, it's all S&P 500, it's all dollar. You don't want anything to do with South Africa or anything to do with the rand. But what you must realize is you're at the bottom of a commodity cycle. All of those 4 instances, we were at the bottom of the commodity cycle. And what's happened after that is we've outperformed for, call it 2-3 years, mostly. We've outperformed everything else in dollar terms because we've had a stock market going up and a strengthening rand. So the best example and the biggest example, and I don't think this will happen again now, but in 2001, 2002, through to 2008, so for 6 years, we outperformed the US stock market by 350% in dollar terms. Of course, that was on the back of the massive Chinese explosion. That's happened. But the principle is still the same. Make sure you know where we are specifically in the commodity and economic cycle before you make a call on asset classes.
Yeah, we'll talk about a foreign sentiment and a stock that I would think participated in the global bull run is Amazon. So the question goes, could you give me your thoughts on the Amazon share I bought at $151? And it seems to not have really moved since I bought the share. Could you give me your thoughts about whether I sell and perhaps invest in something like Visa? So I guess there are two questions there. Amazon bought at 151, it hasn't really moved. Should the viewer still hold? And then if maybe, the viewer's selling, then maybe should they invest in Visa?
In Visa, eh?
Yeah. Okay,
Visa is very cheap. It's a good company. All the credit card companies actually look reasonable value, and they're getting volumes and they're getting transactions because more and more people are swapping online, doing EFTs, using their services. So to buy Visa, I think is right. And let's talk about Amazon.
Okay.
I know the share price hasn't done well, but this is truly a quality company. It is absolutely dominant in what they do. Their product is fantastic. The share price might be a bit high, and that's why it's marking time. I wouldn't sell Amazon.
Yeah. All right. Let's come back home, Wayne, and go into construction. There's a question on Avenge. Shall I cut my loss at 60% with Avenge, or shall I wait?
I don't know. I truly don't know the answer to that. Our construction company, number one, virtually doesn't exist anymore. It's only Wilson Bailey, really. That's the only big player left here. Oh, I think Avenge is option money.
Yeah.
You might as well leave it.
Yeah.
Maybe something goes right. But these type of companies, like Tongaat, what do you do if you own Tongaat shares? I know Avenge isn't quite Tongaat.
Yeah.
But I think just leave it at option money.
Yeah.
It can double.
Yeah.
So just leave it.
Yeah. Yeah. It can either go down, or could it be, maybe it can be a 10-bagger,
but you must just treat it, you must treat it as option money.
Yeah.
So you either make a proper return or you lose everything.
All right. There is a question here on Thungela. Is Thungela a dripping dop roast, or should we be patient for sub 60 Rand per share?
Okay. We all know that a couple of years ago, Thungela was the high flyer. It was a wonderful share. Everyone couldn't buy enough Thungela. Thungela is a commodity company like every other commodity company. We're in a commodity down cycle at the moment. Hopefully the commodity, as I've spoken about, will pick up over the next 2 or 3 years. And Thungela is specifically affected by Transnet problems in South Africa. But if you're giving up at the wrong time. I wouldn't sell Thungela.
Yeah, you still hold. Yeah.
Same as I would be buying mining companies now. I wouldn't be selling any mining companies. I wouldn't be selling Sibanye. I wouldn't be selling any mining companies now.
Well, talking about mining companies, there's also a question on Glencore. What do you think about Glencore at these levels? Goldman Sachs seems to think it is undervalued. Would you say the same, Wayne?
I think putting gold aside, because gold isn't really a commodity share, or they aren't really commodity shares. I think all commodity shares are quite dramatically undervalued now, as long as you believe, as I do, that interest rates will fall, world growth will pick up, and more specifically, Chinese growth will pick up. Because if that's right, commodity shares are cheap. If I'm wrong, commodity shares are just going to carry on going down. So anyone who wants to make a decision on commodity shares, you must first decide, are we at the bottom of the commodity cycle, and does the future look better? You make that decision, yes or no, and then you'll know whether to buy or sell commodity shares.
Yeah. There's a question here on Pick n Pay, Wayne. Your view on Pick n Pay for a buy. I know that it is incredibly cheap. And of course, we're still waiting to see if the turnaround will actually materialize. A buy right now or not?
Well, look, it all depends on, I suppose, how strong you are, what's your fortitude.
Yeah.
Because this thing could turn in 6 months, the share, not the company. I'll come back to that.
Okay.
But the share can turn in 6 months or 6 years. So the true long-term deep value investors, they're filling their socks with Pick n Pay, because to them, if it turns in 6 years, it doesn't matter, they're right. And their investors know how they invest. They know they invest for the longer term. But to come back to the business, there is a huge mountain, not even a hill to climb. There is a mountain for Mr. Summers to climb there. Pick n Pay has been an underperformer. I remember hearing stories about Pick n Pay turnaround 26 years ago, and it still hasn't happened. And they're going to have to borrow money, pay less dividends, if any dividends. They've got to reinvest in everything. They've got to reinvest in their systems, in their distributions, in their warehouses, what their shops look like, revamping their shops, their IT systems. They are so behind that you can make a fortune on the shares, but you just don't know how long this is going to take. Personally, I wouldn't buy. But I fully recognize there's value there, and I fully recognize it could double in 6 months. It more than likely will double over 6 years, but it might get cheaper first.
When do you think?
I'm a little cautious.
Do you think
if you're a 6-year investor, buy. If you're a true long-term investor, buy it.
Yeah. Do you think that there could be a point when Pick n Pay is asking the market for capital?
It could very easily happen. That business, the primary reason why Pick n Pay is so far behind ShopRite, Checkers in particular, is the business has been starved of capital for 20 odd years. So they just couldn't catch up because the money was paid out in dividends.
Yeah. Wayne, I'm not sure if you look at this one, Metrofile. Yeah, the viewers asking if they should buy or run for cover on Metrofile.
Look, unfortunately, I haven't looked at Metrofile for a while, so I can't really comment. I'm really sorry about that.
Well, let's go to India. Is Satrix MSCI India a good buy for the future, taking into consideration that India is one of the forefront upcoming economies in the world? I think people are quite bullish about India at this point.
Look, yes. Now, India, people started mentioning India. I started hearing India for the first time about 10 years ago. And India is a fast-growing economy. It's another China. And the problem with another China or another is that this is volatile. It can go up and it can go down seriously. So my advice would be, on the longer term, you're probably right, but stick to there's only one true rule in investments, and that is don't put all your eggs in one basket. So if you've got 100,000 Rand to invest, don't put 100 into India. Don't put 50 into India. Maybe put 10,000 into India. Maybe put 15,000 into India. So if it falls, it doesn't kill you. Because the problem, if you put all your money into one thing, it might fall, you feel so terrible, you sell, and then 3 years later, it's doubled again. So diversification is and I truly believe this, it's the only thing you get for free in investments. Everything else you pay for.
Yeah. There's a question here. I'm also not sure if you look at these ones, Palo Alto and CrowdStrike. So the viewer says, long-term is my strategy. I have made 100% plus in Palo Alto and CrowdStrike, both growing due to AI beliefs and tech futures. Do I take some profits and allocate to other options? My instinct is to stay with this basket and, whether it comes up or down. Do you look at those, Wayne?
AI, I do. AI is just the name. It's the newest game in town. Everything AI is just going mad. Now, obviously, AI is here to stay. Obviously, it's going to be a growth thing. It doesn't mean the shares go up forever.
Yeah.
So my advice will be twofold. First of all, no one jumped off a 10-story building because they took profits too soon.
Yeah.
Okay, so if you've made 100%, take some profits, even if it goes up. You don't know this. You don't know the future. No one knows the future. Take some profits. And then secondly, have a diversified portfolio. If you put all of your money into AI, you can be a hero. You can be a guru. You can be a wizard. You can be a genius. But if you got all your money in AI and it did what tech shares did, 2 years ago, and they go down 50%, you're dead.
Yeah.
So once again, have a diversified portfolio. Lean it towards AI if that's what you want, but understand nobody knows the future, and nothing I've ever come across just goes up in a straight line. Take Bitcoin. I know they're completely different, but Bitcoin, it was wonderful. It went to 20,000, then it went to 8,000, then it went to 60,000, then it went to 17,000. Now it's gone to 40,000. You know, it's not a one-way bet. These things are volatile.
Yeah, true. And so is the stock market. Wayne, let's get to your stock pick for today. What will it be?
Well, look, I'm actually going. I think South African shares are really cheap. We've seen what a little bit of good news can do to the retailers over the last few days. Little bit of good news comes into the system, they go up strongly. So I'm going to go for South African orientated shares, and it's one I picked a week or two ago. I'm going to go for a bank. I'm going to go for Absa. I mean, these are also very undervalued companies. They just need a bit of volume growth. They just need the economy to do a bit better. They just need interest rates to come down and loan growth to happen. You can get a half-decent return out of them. So I'll go for Absa.
All right. Well, thank you so much for your time and for your analysis today, Wayne. Really appreciate it. That's all from the Business Lunch team this afternoon. Nolutando and the team are back on Monday, same time, same place. Catch and Darling on the close at 6 p.m. this evening. But until then, stay tuned for lots more coming up right here on Business Day TV.